Mortgage rates slipped to the lowest level of 2025 this week. Many Americans, though, still feel priced out of home ownership. Joining us now, housing analyst Ivy Zelman. Zelman, executive vice president. Been doing this a long time, Ivy. How long at your own company? I remember you were toiling with some of the big Wall Street firms for a while, and then set out on your own, right? What year was that?
Well, good morning, Joe. Thanks for having me. We started Zelman in October of 07.
Of 07. That goes back a ways. You have to go back not quite as far to have half of what we are right now for mortgage rates. This is not, 658 is still, whatever we are, the lowest of the year. Does this solve anything? Wasn't it in 2022, it was 3% or something, wasn't it?
Well, if you look at affordability relative to history, today affordability is the most stretched that we've seen since the early 80s when mortgage rates were in the double digits. So it's definitely very challenged for first-time buyers, and we're seeing that with the market really pressured today.
Yeah. We got Berkshire and the nice move in some of the home builders. Has supply changed at all? You're talking from the demand side. Supply hasn't been great either. Is that easing up yet at all?
Well, we just published our July home building survey, and we saw a 7% pullback in starts. But starts relative to orders historically have been kind of on par, 1-to-1. And right now they're about 5% above where they would be historically. So I think we've seen some improvement, but spec levels are still very elevated. And according to our survey, the spec levels are on a scale of 0 to 10 at a 6, are the highest they've been in several years. So we do have inventory that needs to be worked through before we see some relief on pricing pressure.
You know, we're all watching the Fed. We have Austin Goolsbee on a little bit later. Maybe we do eventually, who knows, see some cuts. Does that mean we get out of this relatively high range? I still think people are forecasting 6.5 to 7 for the next, I don't know for how long, for mortgage rates. Do you foresee that? Do you see going below 6 within the next 18 months?
Well, I don't forecast rates, but, given the long end of the curve is really dictate where mortgage rates are priced, I think the higher for longer is really predicated around risk of tariff inflation and deficit. So that's beyond my pay grade, Joe.
Right. Well,
I do want to point out that mortgage rates for the new home market are already well below that. Builders are offering buy downs as low as 3.99 for 30 years, and that really offsets the affordability challenges. But even with rate buy downs, consumers are still having difficulty qualifying. And now we have the whole student loan headwind that right now builders are saying modestly through our survey are impacting them. Was a 7%. We're saying it's impacting. Then in July it was 10%. So we're seeing some headwinds that remain, even with rates well below where they are for prevailing rates today.
For existing homes, is the fever finally breaking, like in some of the real hot areas down south? And there have been declines, or is it just you have to pick a spot and just decide it's not everywhere?
I think there is a correlation to the weaker markets generally in the Southeast. The COVID winners tend to be now the markets that are most pressured. Probably the Southwest Florida market, Fort Myers, Naples, looking out west or southwest in Texas, Austin, Dallas. Those markets are very challenged, and not coincidental. The builders are the most prevalent there, along with second homeowners and investors. So we're seeing people that are taking chips off the table and recognizing that affordability, even if you're a homeowner, tends to be much more challenged when home insurance rates are skyrocketing. We've got certainly property taxes rising. So it's pretty tough out there to have any discretionary dollars left over after all of your non-discretionary expenses.
I mean, not everything is California, but we've seen just some horror stories about trying to rebuild in the Palisades and permitting. And, you just mentioned regulatory issues. It's obviously based on states or more local. But does that add into the issue with trying to loosen things up? Are young people ever going to be able to buy a home, Ivy?
Well, I think it starts with also land prices. And right now, builders are renegotiating in some cases with their land bankers, land developers on their option contracts. And that's definitely going to help their ability to price homes more affordable, or price homes to make them more affordable. But I do think that the regulatory pressures add to the cost of housing significantly through impact fees and other costs that builders have to absorb. And so I do think that that's a definite headwind to really providing affordable housing in this country. And there's many that talk about, well, we'll just build more rental housing. And I don't know necessarily that that's really going to solve the inequality gap, though, unfortunately.
Can you tell me which home builders I should buy? Do you do that, or is it like more? You won't tell me that, or mortgage rate projections? Do you have some favorites?
On the home builders, that's where we analyze, so we can give you some.
Give them to me.
Yes. So we want to point out, too, that one of the things that's interesting for the group, even with the rally, they're now trading at 1.8 times book, 14 times forward earnings, which is the highest multiple that we've seen in a very long time. So I think that they're really reflecting the expectation that the pickup in July that we've seen in volume, we saw a 2% sequential increase in July. Typically, July is down 6%. And we saw for the first time in 6 months, we saw orders improving, and year over year, they were up 3%. So that is giving the optimism to give people more expectations that home builders are now turning the corner. And then, of course, the expectation is the Fed's going to solve everything, which we're not really in that camp because we think the long end will stay stubbornly high. But with that said, the small cap home builders are trading at a 47% discount to the large cap builders. Historically, that discount has been about 25%. So we like some small cap names like Meritage as well as Taylor Morrison. And we just upgraded Schottenstein MHO, given the depressed valuation and its very strong returns. Our outlook for strong returns continuing.
All right. So I'm not going to ask you when I should refinance, or should I do a 30-year or a floating, or I won't ask you any of those things. But thanks for the picks, the stocks. I don't have a 30-year. I think that's am I wrong to not have a 30-year?
Well, I think it depends on your horizon, how long you expect to be in the house. But today, consumers, again, if you're buying a new home, you can get a really good deal, Joe. So maybe you should go look for a brand new home.
No, I'm worried about what the next home I move into is. I mean, it's not no, that's a ways off.